finally, when it was announced that it was going to close, he was shocked. But luckily for him, he had a backup account, so he was able to use that just for a bit while he waited, hoping that they would reopen the bank, because that time there were talks or there were rumors that it was just something temporary and eventually it would be reopened. So he waited, you know the story. After that, they closed it, and eventually it became indefinite. It was permanent. So the bank was not going to reopen anytime soon, until I think one of the other banks took over Chase Bank. So he was explaining to me the story of how it affected his business. For the first 2 to 3 weeks, there was very minimal impact, because he was able to sustain based on the funds that he had in his secondary account. But then now, when it came to the time of tendering, and when you are tendering, especially for him, he used to tender for the government. You normally tender, you produce the inventory. In his case, you imported. Then it took time for him to actually get paid, which now stretched his cash resource immensely. So he was not actually, after he tendered and he supplied goods to the government, it took some time now even for payments to be able to come back. So in that particular period, he was not able to, actually what he admitted is he was not able to do any more tenders because he didn't have any additional capital, any additional liquid capital, because the rest of his funds now were locked up in Chase Bank. Eventually now, once they started paying him, which was like, I think about 6 months or 1 year after that, he vowed that from his side, he'll try as much as possible not to keep any money in his bank. If it's very crucial, he'll keep it somewhere. I don't know if he still keeps to his promise and keeps it under the mattress, which is not very secure. But I could feel his pain at that time, because if you are actually impacted in such a dramatic way, whenever a bank goes down, you actually lose the trust that you have for these centralized financial institutions. They are important, but in this case, he had very many second thoughts before he would deposit anything into any bank, based on that, on the experience he had. And blockchain now, trying to tie that now with blockchain. Blockchain, remember, is a peer-to-peer digital ledger. So you don't have one centralized authority. So how does that relate now with the current scenario that we have? It means that you don't have to trust one particular person, one particular institution, or one particular system with your information, your data, your money in this case, but rather the risk is spread out. And that is why they say, from a blockchain perspective, is that it's a trustless system. You don't rely on trust or trusting one central authority, but rather you rely on a system or a network which now works to be able to replace that particular middleman. So you deal on a peer-to-peer basis. And what is the advantage of that? Of course, it means that it's very much harder for it to go down. Bitcoin has been there for the last about 11 years or 10 years. And in that time, it has never per se gone down. I know, probably if I was to give a personal example, I don't know how many times M-Pesa has gone down in the last 1 year. I know probably 3-4 years, probably it was not as stable as it is right now. But looking at it in terms of a practical and experience perspective, if you look at a blockchain network, being an immutable record and being one that is not susceptible to fraud, it means that in that particular case, that there is no single point of failure that would bring down the entire network. If one particular miner, if one particular server was to go down, the network still continues and adapts, bypassing whatever has gone down. About 2 months ago, giving a more relevant case, there were floods which had occurred in China. And if you follow, for instance, Bitcoin and Bitcoin mining, you realize about 60%, currently about 60% of the largest miners are actually based in China. So there were floods and they impacted about more than 70% now of the miners that were based in China. So there were some miners whose network connectivity was cut off, others whose electricity supply was also cut off. But how did that impact the Bitcoin network? It did not. The network might have been slow just for a couple of days, but there was no impact in terms of the overall transaction rate. How does that compare with a typical fintech? I don't know. There are some banks here where if they have one data center and if that data center floods, then your money is as good as gold, unless they have backup. If there is, maybe if I was to give another example, if maybe the bank was attacked by ransomware in this case, and the database was encrypted, then you can say goodbye to your cash. Almost certainly, you can say goodbye to your cash unless they have some offline backups in this particular case. So what is the advantage in terms of, and how can that be able to be leveraged now going forward? So we have, as you said, fintech is something that is growing, but and that is the nature of the world. There are new disruptions which are coming in. So now you have decentralized finance or DeFi, which basically is trying to disrupt now the already new fintech startups. Decentralized finance is basically embodying that finance, the fintech technology that we currently have, but now embedding it within the blockchain within a decentralized application. So that again, you don't have any one single failure point. So for instance, if I was to take some of the typical examples, the biggest example we know of finance is borrowing and lending, probably through chamas. If I was to give the example, the chamas for borrowing and lending. So that now, from a banking perspective, if you have one central authority, you borrow probably from your M-Shwari, or you borrow from your bank. But that now has actually been embedded within decentralized finance. We have for instance, a typical example, we have Aave, we have tokens called Aave, we have tokens called Compound, where you can be able to use those and the decentralized app on which they are based on to actually borrow based on crypto assets, and also be able to lend out and get interest at the end of it at a premium rate. So typically, just as you are thinking, the same way you'd borrow now, and then you'd put your logbook maybe as a security now, is the same way now. Instead of putting your physical security now on the blockchain, you actually put in now a crypto asset. So you could put in, for instance, your crypto coins, your Bitcoins, deposit them, and then use that now to borrow in terms of borrow USD or borrow in terms of any other stable coin. So just acting as a replacement now of the existing traditional finance that we know of. Another example you have is maybe in terms of trading. I don't know if any of you have used, for instance, GG or something of the same, which is the best example that I would talk of a peer-to-peer trading. So peer-to-peer trading in that case is when you have an individual buyer now who is selling now to an individual seller who's now selling to an individual buyer. So decentralized finance, you have now similar equivalents. And I think the biggest one currently is Uniswap as a decentralized application, where you can now be able to trade in terms of different crypto assets. So for instance, if you have Bitcoin and you want to trade that for maybe the second biggest currency, Ethereum, you can be able to trade directly. So you don't even need to go to a crypto exchange. You can be able to trade directly from one for the other. Or if you want to be able to actually loan your assets so that you can be able to obtain a profit based on the same profits that I use for trading, you can be able to do that. So how does that now compare with the traditional finance? How does that actually impact traditional fintech, let's call it that way, and traditional finance? If you were to do a comparison, the biggest difference, of course, is that when you eliminate one central authority, you actually reduce the margins that of profits that would now impact the buyer and seller in this case. So by eliminating one single source of profit, one single channel, or eliminating a single point of failure that is there, you are also able to spread out the risk that occurs as a result of this. However, this is something that is still growing. After decentralized finance came about, I think there were a number of centralized companies which came in and now tried to develop hybrids where you combine the best of centralization and also the advantages of decentralization. So these are CDFI, centralized, decentralized finance. So these are companies which come in now and now set up platforms now for decentralized finance, which allow, for instance, for exchanging of assets or borrowing and lending of assets based on the same, and then they take a portion of the cut of those profits. Now, what is the key thing that allows decentralized finance to be able to exist? The key background technology that is there is actually smart contracts. And smart contracts can be defined very many ways. But if I was to take a simplest example, if you have ever used a vending machine is the best example or illustration of an actual smart contract, because it takes external input, then on its own, it actually enforces and self-executes and enforces that particular contract that has been created there. So for instance, you want to buy maybe a can of Coca-Cola, and that can cost 100 shillings. So you put in the required money, and then based on that, once it has calculated you've reached the required level, it dispenses out the can and any change which is there. So it does not use any human input. So it executes on its own, does not rely on any external influence other than the input, which is predefined and which is specific. So when you put in coins worth 100 shillings, dispense out one particular can. Smart contracts have actually been defined for quite some time. They were initially described from the 1990s, but in terms of their merger with now decentralized, began once Ethereum was created. And if you look into the background of smart contracts, it's nothing very advanced or nothing that is, you can call it very revolutionary. What is revolutionary is actually being able to embed smart contracts within a decentralized network, and being able to actually use these smart contracts now to be able to replace any middleman, any human decision making, if I can call it that way, any centralized human decision making, which would now be used to act as, for instance, a limitation, or for instance, being used to control any transactions within a system. So smart contracts, by virtue of the fact that they act autonomously, they don't discriminate. They don't. They would not be impacted by any human emotions, thoughts, politics, or what have you. So they act more efficiently. They are able to, therefore, reduce in terms of the time that you'd actually execute a particular contract or turn around on a particular contract. If I was to give the previous example, in terms of loan processing, I remember when I took a loan about, was it 4 years ago, a personal loan. I remember after all that run around process, I wish I'd used the Telco actually from the word go. After it took me about almost 3 weeks to be able to finally get that loan. And that cash was required very urgently. But now in terms of decentralized finance, as soon as you meet that particular criteria and you deposit the assets and you immediately request that crypto loan, it's an instantaneous thing. Automatically just gives you back, gives you the funds based on the value of assets which you've actually deposited. So there is no human logic, thinking, evaluation that would slow down in terms of the overall process. And that is the advantage of a trustless system. What they say, what they actually define it is actually more of the code. Code is the law. So based on the actual code that is actually embedded within that particular smart contract, the code executes, and irrespective of any other circumstances, the input now will just be processed into the actual output in this case. So basically, if I was to summarize it, what is the future of blockchain and fintech? You know, I was actually, I remember when James was talking about the growth of the internet and how the internet grew from initial email into the full-blown system that is now there. That was a think about, took a timeline of 20 plus years, if I remember correctly. 20 for the internet plus 20 plus years for the internet to actually get to the level that it currently is. And in terms of from a coverage perspective, and in terms of even the number of people who actually are connected to the digital internet. So in terms of blockchain, what would be my thoughts around the same? To be honest, it's not something that will pick up on popularity today or tomorrow. This is more of a long-term technology. We'll be talking of blockchain in the next 10 years plus, still as a growing technology, still something that is dynamic, and still something that is still additional use cases are actually being developed. So it's very interesting when Her Excellency Suluhu actually challenged the central bank the other day, I think about 2 days ago, challenged the central bank of Tanzania to actually be more proactive. And that's also a challenge to all of us, to actually think into the future and be more proactive, because she challenged the central bank not to wait for change to happen to them, but to go ahead of change. So she was challenging Bank of Tanzania that cryptocurrencies was something that was coming, and it made sense for them to begin exploring on the same. I don't know if you are aware, El Salvador recently enacted Bitcoin as a legal tender. So therefore, in El Salvador, basically, although it's something which of course has just been enacted, so it's not yet fully implemented. Basically, in addition to the US dollar, Bitcoin also is legal currency and also has all the benefits of being a legal currency. And you know what fits the definition of a currency? First thing, a currency has to be a store of value, has to be a unit of exchange, store value, unit of exchange, and a measure of trading. So therefore, basically what they have allowed is that if you have some water, maybe you are selling, you can decide to price the water maybe at $1, or you can decide to price it at Bitcoin, maybe 0.001 Bitcoin in this case. And therefore, that would be accepted now as legal tender. And making it now, in addition to that, making it mandatory now. So that now, if you are a shopkeeper, basically, you can't refuse to accept Bitcoin. I would be very interested to see how that will progress, because I believe the snowball effect will pick up based on how successful they are at actually implementing the same. Other countries, I'm pretty sure, will begin to embrace not only Bitcoin but the larger blockchain technology. And going forward, once one particular implementation of that particular technology has been embraced, other channels now become embraced, just like the internet. Once email now was actually developed and became sort of a killer application, other technology came about. So you have email, then you have web surfing, then you now have streaming, then it goes on and on. Additional use cases now developed over the internet based on the underlying technology. So before we were talking of, for instance, the Internet of Information. based on blockchain technology, as this grows, as these use cases grow, now we'll have the internet of value in terms of allowing, just as easy as it is to send an email from here up to China, or from France all the way till Iceland. It will be possible now to actually send now value. And that, when I'm talking of value, it could be in terms of currency, it could be in terms of digital assets, from here to any part of the world that is connected to the internet. So what's the next frontier on this? I remember I was discussing with my MD as part of the interview process. What are some of the biggest competitors, M-Pesa? And he told me his biggest competitor is not any of the other banks, but actually, when you look at the Kenyan context, probably in terms of sending of money, or rather holding of money and using of money, paying for transactions, the biggest competitor for M-Pesa is cash. And as we continue in terms of financial inclusion, as financial inclusion continues to grow, and here financial inclusion is talking of digital financial inclusion, as it continues to grow, and I'm sure as cash also continues to reduce, probably other forms now of digital financial payments will also grow. I'm not saying that M-Pesa will move on to the blockchain. I think we are still very far from that. But one very good example is something that China is actually experimenting. And China probably has picked on this as a very forward-thinking country in terms of trying to improve financial inclusion and trying to grow. It would be central bank digital currencies. So what central bank digital currencies, what are they? So basically it's the same Kenya shillings fiat currency that you have, but now fully digitized. So it's something like M-Pesa, but now without having one central authority in place, or sort of one central authority in that particular case. It could be, for instance, a private network, like in China's case, could be a private network which is controlled and managed by the government, but there is no one single server which you can say now is the one that is holding all of these particular the digital ledger that is there for all the balances that people have, but rather it's something that is decentralized, distributed, and now holds value for the currencies for a particular nation. Yeah, so I think I've come more or less to the end of my presentation. I don't know if there are any questions, discussion points around this. Yeah, okay. Thank you all. I appreciate you for the listening. Yeah. Oh, question. Yeah. No, it would be intellectual dishonesty if I was to say it's risk-free, because there is nothing which is risk-free. I'd rather say that in terms of the risk is reduced, because if you have very many servers which are processing a transaction, let's take a simple case. You have one very strong, secured supercomputer, or you have very many smaller distributed computers which are processing your transactions. The advantage of the single computer probably is that economies of scale, it would probably be cheaper. But what happens one day when there's an internet outage, or maybe there's a flood and that building is flooded, or there's a power outage? But now when you spread it out, the risk reduces significantly. So if I was to give another typical example, how many times has the internet gone down? Does it mean it's risk-free? No. There are cases where you find sections of the network. I think about a month ago, there was some DNS servers which had gone down in the US, and that impacted a section of Cloudflare servers or something like that. So it's not risk-free. Nothing is ever risk-free. And in terms of probably being a new technology, I would actually put it in terms of the actual technology. In terms of humans now interacting with that technology, the same humans who will fall for a scam from sending you cash when you receive a fake SMS. It's the same thing that someone will send Bitcoin to the wrong address, for instance. So in terms of the technology, it's probably reduced, but being a new technology, the risk materially increases. Yeah. Mm-hmm. Yeah. Mm. Yeah. Mm. Mm. Personally, in the public space, no, there is none which I've heard of. I've heard of different companies exploring blockchain from a more individual perspective. I know maybe like there was one Kotani Pay, which was exploring it for foreign exchange remittances and for paying also for microtransactions. So, for instance, in that case, people would be paid in digital currency, but in terms of the same manner that Ethiopia you're talking of, because I think probably from a public sector CBK perspective, there's been a lot of skepticism about cryptocurrencies, and because cryptocurrencies, people confuse it with blockchain technology, so everything gets much about, and you find nobody is very interested, at least publicly, in terms of adopting blockchain technology. Of course, you heard of the Bitangele, and so Walubengo, who was one of the task force members, and they had presented many practical use cases. But in that presentation of the use case, to be honest, I think from comparing with some of our partners, some of our neighbors, Tanzania, Uganda, I think we are significantly behind now in terms of adoption of that because of probably the conservative nature of some institutions. That's my take, of course, my personal take. Yeah. Mm-hmm. Yeah. No. Mm-hmm. Yeah, so no, M-Pesa is not going on the blockchain now. I don't know. You know, they say that the world, you either adopt or you die. So probably in the future, I don't know. It's something very good, but I think the challenge has been the regulator. You know, for any new product, any new service on M-Pesa, you need to get approval from the regulator. And of course, no. In this case, M-Pesa is regulated by CBK. Yeah. So it's a conversation you have, and it's not a conversation you have in 1 year, but that is takes several years. So it's not something immediate, but they are outside the country. There are other ones who are exploring now in terms of the money, mobile money, and combining that with blockchain technology, so that, for lack of a better word, maybe I'm a bit conflicted, you eliminate Safaricom in all of this. So that now it's a peer-to-peer transaction, just like any of the other cryptocurrencies, but now using, in this case, a fixed, a currency that's actually tied with the local currency. Yeah, so it's basically, instead of having a central bank backed digital currency, it's like a private digital currency, basically. Yeah, your second question, sorry. Yeah, they have they have sandbox, and I was told they have two use cases they're exploring on the sandbox. But the challenge now is that when you enter anything that it comes talks of a payment system, international remittances, mobile money, banking, fintech in general, you step on CBK's territory in this case. And that's why now anybody gets jittery because of the additional regulatory risk that comes with CBK. Yeah. So unless maybe Governor Patrick or yeah explores something along or changes his mind drastically, yeah, or Sulu who comes and maybe talks to our president maybe to consider it. It's not something that would progress. To be honest, in my opinion, would progress very much further. Yes. Yes. Well, that's a good question. My personal opinion, maybe it depends. It depends on whether commercial banks will actually be more willing to embrace blockchain, will be more willing to embrace disruptive technology. If you remember, I think about 8 years ago, something like that, when M-Pesa was still growing, or maybe 10 years ago, when M-Pesa was still growing, you can remember then the banks were resisting it. And I remember they even formed a consortium, and they went and they talked with, I don't know, the CBK governor and what have you, to try and kill M-Pesa that time. Well, thankfully for my job, they did not. Yeah, and for a number of people here who also interact with M-Pesa, they didn't. But the benefit, in my opinion, the benefit that M-Pesa had was that it was growing in a time when there was no regulation. So it was an ambiguous gray area. So it was able to, for lack of a better word, sneak through before the laws were there. If the laws were there, I'm pretty sure they would have been very negative and they would have just banned M-Pesa or any mobile money before it had time to reach a critical mass. So blockchain, for sure, blockchain will be there, whether or not Kenya wants it. Now, it just depends on whether the banks themselves will be ready to adapt to that particular technology. Because you can see here, there are cases of where centralized institutions now come, and then they also leverage, or they also use, or they set up platforms for decentralized finance, which so that now they ensure that they are not completely obliterated. They're not put out of business, basically. Yeah. Yeah. Yeah, definitely. I would think so. In fact, they were saying you can Google for yourself. From a worldwide perspective, I think after COVID, the current percentage of cash that is actual physical cash is 8%. 92% of the actual money supply is just zeros and ones that exist in bank accounts or in central bank ledgers. Only 8% of the money is actually represented as physical cash or physical notes. So I'm sure as we become more and more digital, like I think, for instance, Sweden was an example where they said they were also exploring central bank digital currencies. They were actually talking of actually eliminating notes and coins because it did not make sense there. Everybody already has a smartphone. Everybody has a credit card. So everything is already digital in that case. So it's something that will continue to grow. And I think we even saw it last year. COVID, being a black swan event, a totally unexpected negative event, which nobody predicted, means that everything changes. There are organizations and companies which adapt and which are able to thrive from that negative event. Then there are other companies and organizations which, for whatever purpose, based on the industry or what have you, they are not able to adapt and they basically suffer and go down. Yeah.
You mentioned blockchain being used in voting.
Yes.
Example. Blockchain applies more to systems where there is consistent I tell land somebody, then after 3 years, then I send it to somebody else.
Yeah.
And in over 5 years, you find the record that changed 3 or 4 times.
Yeah.
In a case of election, how does that really apply?
Because so in a case of an election, how in terms of actual being able to apply that election voting. So in the case of like Malta's elections, and I don't think that there's the only case. I think there was one in they were exploring in Argentina or something of that sort. You have the actual, each person has now, for instance, public and private key. You know that private public key linking. So everybody has both a private and a public key. Then using that, of course, you don't expose that to the public. This is all within, for instance, in their case, it was a mobile app. You based on that particular mobile app now, which has a private key and a public key, you are able now to say that I voted for team. Then you sign it off with your private key, and that data now is saved in the blockchain. Everybody can be able to see. Everybody can see that person 001 voted for team. Person 002 voted for faith, for instance. So you don't have is public. What is only private? Who is the person behind 001 or who is the person behind 002? But once now all of that voting has now been undertaken and validated, the actual tallying process is a public exercise. Anybody can be able to tally that particular process. Now, in terms of your question about changing of the data, when you remember blockchain technology being something immutable, it doesn't allow you to change previous transactions, which is where its security comes from. So someone can be able to go ahead and tamper and say, team Theuri person 0025 voted did not vote, change his vote for X and now manipulate it so that now it shows for vote for Y. Because if you try and do that, everybody will be able to see this particular block has been changed because its hash does not match anymore. Yeah. So if in that case, by being immutable and therefore preventing any previous changes, it secures your vote. So going forward, it just becomes a matter of actually now tallying all of those read-only blocks of code that have been combined together to form a chain, and then coming up with the total votes and seeing who's the winner. Yeah. The cost of taking? Is it when I look at how much our elections cost, I think that is way cheaper. If you remember, our elections cost quite a bit. They cost in terms of many billions. I question about that, but anyway, that's not my place. It's probably cheaper to digitize in that case such an election. Of course, it also depends on the target users, because basically here, one of the reasons why it was adopted in a university is because you have young dynamic thinkers who are ready for change. If you were to try and do that probably in the same population of the full population, you may have some conservative people who may not believe on digital technology. But in terms of cost, I don't know what was the actual cost. But when I look at even our examples for apps which are developed here, it's way cheaper, way faster, way more agile to be able to actually digitize that and implement it in an app, which is now linked to the actual blockchain rather than doing it the old-fashioned physical way. But of course, that depends on who your voters are. Yeah.
It's a very thoughtful I have a few, let's not call them concerns, but just points that I'm thinking of when I think of trust and financial inclusion. So there are sectors that do just define confidence in society, like the transport. Then us being an informal.
Yes.
People say this is a brand.
Yes, true.
Every time you go to vendors, they say, I don't expect end of the month.
Yeah, yes.
So how do you do that? What's your long-term plan to do? They do my psychology around
To be honest, I don't know if I'm the right to answer the question because because remember, there is nobody who is backing digital currency, because what you'd basically be talking about is adoption of digital currency. And that's one of the ways that why digital currency has not, even as you're saying, it's a new and revolutionary technology. It's one of the ways why it has not picked it up. If you look at the example, maybe as a comparison, because this is blockchain and fintech. If you look at, for instance, for M-Pesa, I mean, it had a company behind it now, which was engaging the regulators, which was now engaging the market to be able to publicize the M-Pesa and pick it up. But it still took many years. It took, I think, over 6 years plus for it to actually reach the level, I can call it, of critical mass, where now M-Pesa became more of something that can be adopted, and it's still not yet there. COVID might have given it a very big push to proceed on, but again, that was an exceptional event, exceptional negative event, which opens up people's minds to thinking in a different way. Now, the challenge that we have for decentralized applications in general and blockchain technology, anything which doesn't have a central authority backing it up, is that it can only grow in an organic manner. It can only grow by word of mouth. So just the same way, like me, I heard of Bitcoin from my cousin who was outside the country, is the same way now it will proceed on by word of mouth. When I have a positive experience, then I will tell my friend here. If I have a negative experience, vice versa, I will tell my friend here. And it was an interesting case, because if I remember back to even when I started on Bitcoin, I started on a bit, then I think probably touching on what Faith was talking about, somebody came up with a very good offer. I'll sell you some Bitcoins at like a 20% discount. So I was shocked, but I fell for the gimmick. Long and short is that I was actually conned for some I lost some money there. It was very painful. Yeah, but I think probably looking back, the advantage that already I had a positive experience with Bitcoin, so I was able to isolate this painful experience and and move on in terms of it. But now, if someone's past experience is that negative fraud experience, if you are promised something like that, and that's what it ends up, then it creates a very negative impression, and there is nobody else that you can go to go and refund or complain to or what have you. You just bear your loss and you say Bitcoin is a scam, and that's how you end up on it. Yeah. Yes. Mm. Mm-hmm. Mm. Mm. Thank you.
I have an announcement. The bar of the other side. Not this way, and then walk out is another side. So that's where we have our hostel. If it's supposed to start with the bottom,
in the next 20 minutes, yes.
So I think we can do it like that. If you are saying for this longer, things like that. I appreciate you also there. So thank you. Bye.